Assalamu alaikum friends, welcome to lecture 30 of SBR IFRS 8, which is operating segment. Now this standard does not frequently come in your SBR exam, okay, but it is still better to be prepared for all the standards because you never know when it comes. It has a chance of coming, not coming, like you can say 40% to 50%, okay, but it's not standards like your revenue or your non-current assets or your intangible assets. It's not those kind of standards which usually comes, but it comes, right? Occasionally it comes. So here you need to go through reporting segments. What is reporting segment? You first need to know that. Then aggregation. Aggregation means you are summing up two or three segments together. Quantitative threshold. This quantitative threshold is the one which you need to memorize. Disclosing reportable segment and then assessing segmental reporting. Okay. What is an operating segment? First of all, what is a segment? Before we move on to operating segment, what is a segment if I ask you? You must be knowing this from your previous paper, management paper. That segment is when you divide your market into segments, various groups based on similar characteristics. For example, let's say if you have a shoe, okay? Now you have a different market for that shoe. Let's say we are basing it on gender. We have two different gender, female and male. Shoes for male, shoes for female. Then we have shoes for kids, right? So, so that is known as segment. Groups which have similar characteristics, we join them together and then we create segments. In airplane, there also we have segment. How? Business class, economy class, based on the earning capacity, right? The wealthy ones can afford the business class, the first class business class, right? And there you are charging them high ticket price. Whereas in the economy class, that is for the normal people, right? Not so wealthy, okay? For some, like you can say the pay is quite economical. It's cheaper than the business class. Now, why do they divide it into segments? I'm not here to give you a detailed explanation, just briefly I'm telling you so that this segmental report becomes easier for you. The reason is because it is a way to generate revenue. Okay. Not everyone in the society have a same social class. Everyone is divided according to their income level. Some you'll be seeing they are at lower level, some at a middle level, some at a higher level, and some at a super higher level, right? So when you charge the same amount of revenue, let's say from all the class, you're not able to generate that much of revenue. Okay. But if you charge differently, you differentiate your price based on geography, demographic classes, based on the gender, based on age wise, you can generate more revenue. That's the reason we have segments. Okay. And when we have segments, the revenue is different, the assets are different, everything is different. Okay. But in your income statement, when you show the revenue, it just shows one revenue. Okay. So to understand it better from where the major part of your revenue is coming from, it is better to show the reports in segments, which segment is generating the highest revenue. That's why we have this segmental report. Now the revenue will be divided according to segment. You can say which segment is a profit generating segment, which segment is a loss making segment. So accordingly, you can make a decision whether you have to go with that product, whether you have to go with this segment or no, whether you can add another one or delete another one. So this gives you a better decision making power. That's the reason we are having this segments, right? And we report also this segment, but we do not report all the segment. Okay. Now we are moving on to operating segment. Since you got a clear idea of what segment is, operating segment is defined as a component of an entity. It's a part of an entity. Look at the bigger picture. Entity is a big picture. Inside that we have a small circle, that is operating segment. Operating segment should have these characteristics. Okay. Even in your exam, if you are given segments, you can be given 10-20 segments. You cannot report all the segments. You have to see whether those segments have these three characteristics. Number one, they have to engage in some kind of activity which generates revenue and incur expenses. Second, Their results, their operating results are reviewed by CODM, which stands for Chief Operating Decision Maker. They are the one who will review the operating results. Third, discrete financial information is available for that segment. So this three things has to be there for it to be called operating segment, because only operating segment you can report. Okay. Now, not every part of an entity is necessarily an operating segment. That's what I've been telling you. Like corporate headquarters or other similar departments, they do not earn revenue. Therefore, they are not operating segment. Okay. An entity's pension plan is also not an operating segment. That means you do not report. First, you have to have the clear boundary of what is a reportable segment. Only operating segments are reportable. Okay. Now we are moving on to aggregation. What is aggregation? Aggregation means you add up. Okay. IFRS 8 says add two or more operating segments together and show them as a single operating segment. But you can only add up or aggregate with the same. Okay. The meaning is same. Aggregate only when they have similar economic characteristics. If they are very different from each other, you cannot aggregate. Okay. It should have these four characteristics. Number one, they should have similar product and services. They should have the production process which is similar, or the class of customer is same, or distribution method is same. Okay. Class of customer, let's say for automobile industry, you will not take a Porsche or let's say what, Ferrari's customer, and you will not aggregate it with the customer of Toyota. Why? They have a very different class of customer. Toyota is affordable by all the classes, all the level of income. People can afford Toyota. Okay, it's a cheap. Toyota is referred to as cheap, affordable, economical. Whereas Porsche or those high brand luxury cars, they are sports car, which is only affordable by some very highly wealthy people. So the classes of customers are very different. Even the way they are distributed is very different. So you cannot aggregate these two segments. Okay, this is just to show you an example. Now we'll move on to the question where we can aggregate and where we should not aggregate. Test your understanding 1. E-games. Okay, in this question they have aggregated e-games and high street stores. Okay, so let us first go through this. E-game is a UK based company that sells computer games and hardware. Okay, sales are made through e-games website as well as through high street stores. So they are selling through website and they are selling through high street stores. What are they selling? Computer games and hardware. So in terms of product, they are same. Okay, now but the prices are different. In store it is $40, but online it is $30. Okay, the chief operating decision maker, okay, they are showing the results of the online business separately from the store. However, they will aggregate together for disclosure. Okay, should the online and the high street be aggregated into a single segment, or you should separate, is the question. Whenever a question like this comes, you have to link this to the four things that is given. What is it? Product and service, distribution method, type of the customer, production process. So you have to see whether they are similar or not. If they are similar, you can aggregate. First, let us see the product. Okay, if you see in terms of product, they sell the same type of product. Okay, sell same type of product both in the store and online. So in this, yes, it makes sense to aggregate, but do not be too quick to reach to a conclusion. You have to look at the other factor. Second factor, customer. See where the customers are going to collect. Online, they are going to collect in online, and when it is in the store, customers are going to go to the store and collect it. So in terms of distribution, there's a difference. Distribution is different. Online and retail store. Coming to the third point. What is it? Sales price. If you see the sales price also, it's different. Here it is 40 in store, whereas in online it is 30. So because they are different sale price, they cannot have a similar gross margin. They are going to have a differences in gross margin. So that's why you cannot aggregate them together. It's not advisable because it's difference also. So you see only the first point is similar, but the rest two, they are different. So more points are different than similarities. That's why you should say that is appropriate to disclose these two segments separately. Okay, disclose, this is how you conclude the two segments separately because their economic characteristics are different. Customers are going to collect in two different platforms. The margins are not similar. Now let us move on to the next part. This is a very important one, which is quantitative threshold. You need to memorize this. In order to report segments, which type of segment? Operating segment, you have to meet any of the following quantitative threshold. Okay, number one, revenue. It's a reported revenue, whether external sales to external customers or inter-segment. Inter-segment means from one segment to another segment you're selling. Inter-segment sales, both together, okay, should be 10% or more of the combined revenue of all operating segment. If it's less, you do not report. Second, profit. The reported profit or loss is 10% or more of the greater. Greater means you have to see whether the profit is more or loss is more in terms of the amount, the figure. It does not matter whether loss is negative or profit is positive. So you see, no, it's not based on the sign. You have to see, add up all your profit and see the figure, add up all your loss of the segment and see the figure. The greater of the two, you have to take the 10% of that. Okay, that's what they have told you. Now, asset should be 10% or more of the combined assets of all operating segment. So what are the three areas you need to remember for quantitative threshold? The 10% rule, 10% or more of three things: revenue, asset, profit or loss. Okay, next we have what is known as 75% threshold. What is it? At least 75% of the entities external revenue. I'm not saying about internal, intersegment. Only external revenue must be included within that operating segment. That means you will see that some segments are not reportable. If you go by the 10% rule above, they are not 10% or more of the reported revenue. The profit or loss is not 10% or more. The asset is not 10% or more. But to make up the 75%, you can report those segments also, which earlier you haven't reported. Okay, so you take those small segments, join them together until you reach the 75% threshold. It's a must. You have to report 75% of the in the 75% of the entity's external revenue must be included in that reportable segment. Okay, now information about operating segments that are not reportable. What do you do with it? You combine them all together, aggregate, and you include it into all other segment category. You see, others. We have that label, right? Others, or all other segments. All other segments are in that category. Now let's do a question in this. Test your understanding too. Identifying reportable segments. So you have been given some segment based on geography. Now you have to say which segment must be reported. For this, you should always apply the quantitative threshold. Okay. So first, let us start with the 10% test. Okay, 10% on revenue. So what is the total sales? You have to see the total sale, okay, not the external or the internal revenue when you are applying the 10%. So if you see this is 1000, that means it's in thousands. 1 million, dropping down the three zeros. So it's 1 million. Okay. working one. Working one is 10% revenue. First we'll check by the revenue. Okay, so 10% of 1 million is 100,000. Okay, so all segments whose total sales exceeds 100,000 are reportable. If you go by that, just we'll write yes or no next to it. Okay, yes, why for yes and for no. Okay, more than 100,000. Europe, it's 260,000, so yes. Middle East, no, because it is 78,000, it is less. Asia, yes. North America, yes. Central America, no. South America, no. Okay, so only three has been yes. Europe, Asia, and North America till now, which are reportable because we are looking at the total revenue. Okay, when you add up this two, the internal and external, you should be getting 1 million. Now we'll look the profit. Working 2 is the 10% of profit. Profit or loss. So 10% of the profit. Okay, what is the profit? See, when you're recording profit, you have to add all the profit making and loss making separately. Here, you have to add 98, 47, 121 and 12. Add together and see how much it is. Okay, of 98,000 plus 47,000. This all are profit. Okay, 121,000 plus 12,000 equal to, it is 27,800, the 10% of it. Now 10% of loss making segment, which is 26 and 15. Only two segments are reporting loss. See which one is higher. So 10% of, okay, 26,000 plus 15,000. Which is 41,000. So 10% of that 41,000 is 4,100. Okay. All segments which make a profit or a loss of a greater than 27,800. Which is greater, this one or this one? It is this one which is greater. Profit. If you go by the amount, profit is bigger than the loss in terms of amount, absolute amount. So 27,800. So any segment, okay, that makes a profit or a loss of greater than this, both profit or loss of greater than 27,800, look at the absolute figure, is a reportable segment. So now we'll go by the test again. 98, yes, because it's more than 27,800. 26, loss, no, not because it's loss, but 26 is less than 27,800. 47,000, yes. 121, yes. This one is no, even this one is no. So we are still reaching the same conclusion even with the profit and loss, the one which we reached with revenue. Now the third column is assets. Working 3, 10% of assets. Okay, so assets is 10 million. If you apply 10% on 10 million, will be 1 million. Right? So if you go by this segment which are recording more than 1 million, this is yes, this is no, no, yes, no, no. Okay, so if you again go, it's almost similar. Okay, so now the question is, I'm making a next column here, whether you have to report or not. Okay, one by one we'll go. Europe, yes, because all the three are yes. This is yes, this is yes, this is yes. All three are yes. Middle East, There are 3 no's, so it's a no. Middle East is out. Coming to Asia. Asia, according to revenue and profit and loss, it's yes, but according to asset, it's no. So it's a yes. At least one of them should be yes. North America, it's a yes. All are yes. Central America, all are no. And South America is also a no. So what are the 3? Europe, Asia, North America. These are the 3 segments that are reportable. Now we have to check the 75% test. 75% test applies now. After the 10% is over, only you have to apply the 75% test. It's not the other way around. Okay. So check in terms of external revenue. Of the 3, Europe, Asia, North America, NA. So we'll check the revenue, only the external revenue. 140, 150 and 195. Add the 3. 140,000, 150,000, 195,000. If you add the 3, it is 485,000. Okay. So 485,000. 485,000 out of what? External revenue is 612. Out of 612, you have to check the percentage. 485,000 out of 612,000. In terms of percentage, how much is it? 79%. So it has already met the 75% threshold. It's more than 75%. That means you don't have to report any other segment. Only those 3. So now we can conclude the 3 segments that are reportable are, I will highlight it for you, Europe, Asia and North America. These are the 3 segments that are reportable. Now we are moving on to disclosing a reportable segment. You can disclose general information like factors used to identify a reportable segment, the type of products and services sold by each reportable segment, information about profit or loss, like measure of profit and loss, measure of total assets, and other information that should be disclosed if they are regularly reviewed by chief operating decision maker. Now, see, this is how it will look like. This is an example of a segmental report. This is how it looks like. But in your SBR exam, do not worry, you don't have to make all this reportable segment. But yes, you have to know the quantitative threshold and to identify whether it's a reportable segment or not. Okay. So you can see revenue from external, internal customer, interest income, interest expense, depreciation, impairment of assets, segment liabilities, everything based on segment. Okay. Under notes, you can see there are 2 notes. Okay. All the other column shows amounts relating to segments that are far below the quantitative threshold. If you see here, all other. After segment A, B and C, there's a 4th column that says all other. These are those segments which falls below the quantitative threshold, that is below 10%. Second, impairment of asset is disclosed as a material non-cash item. Okay. Now, how do you assess this segmental report? See, segmental report gives some useful information, like it gives information from the management's perspective. Second, different parts of the business. Earlier, I've told you the example of airline business. Okay, different part of the business have different growth opportunities. Not everyone has the same growth opportunity. So segmental information can help the investors to predict the future outcome. And geographical disclosure, just now we saw Africa, America, South America, Central America, Asia, Europe, they have different risk. Okay, therefore it is better to disclose them, and it is usually helpful for investors who are in the multinational businesses because they have businesses worldwide. They have different geographical location and the risk in each countries are different. Growth rates also different. So it's not advisable to aggregate everything and show as one total revenue. Show it separately based on their geographic. Now, segmental report do have some limitations. What are they? Number one limitation is trading between segment. Okay, when you're trading between segment, it does not show a fair result of the operating segment. Why? Especially if the transaction is below the fair value or it does not occur at the fair value. Most of the time when you're trading between segment, inter-segment, sales and all, they're not at fair value. So it does not show a true picture. Second, IFRS 8 says, okay, segments should reflect the way in which entity is managed. So if you're using segmental information to compare different entities, it's not going to be effective. Third, segmental process is based on management's perspective. Okay, and some users lack trust in the management's intentions also. For example, what could they do? Management must sometimes try to hide a loss-making areas of business into a larger profitable reporting segment. They can do that intentionally. But if you segment, you cannot hide it. Okay. Then many entities over aggregate segment. They keep on adding. So this reduces the level of detail that are reported to stakeholders. Sometimes it's better to show details rather than a summary. Common cost. What about common cost? Very difficult to allocate to segments because you can choose any basis and those bases might not be reasonable. Okay. Now let's summarize IFRS 8. Reportable segment we define based on management approach and the 10% threshold. 10% of what? Revenue, that is the total revenue, both external and internal you add. 10% of profit and loss. For profit, you add the figure and see. Loss, you add the figure and see. Whichever two is greater in absolute amount. Don't check the plus and minus sign. Absolute amount. Take 10% of that. And the 10% of assets, total assets. Okay. If any of it is yes, it is reportable. Later, you have to check the 75% threshold also. Even after reporting all those 10%. If there is something, some segment which does not meet the 10% threshold, still you have to report. Why? You have to reach the 75% threshold. All external revenue should be reported up to 75%. Disclosing segmental information, general information, information of profit and loss, entity-wide disclosure, measurement, reconciliation, and problem areas like it is very subjective, common costs are hard to allocate between segment, and inter-segment sales might not be at fair value. So it does not give a true picture. That's it for IFRS 8. Okay, again, it's a very easy standard. You can relax. Okay, some questions are there in the past paper. Please go back and check. And we'll be moving on to the next standard in my next lecture. That is IFRS 9. So till then, thank you for watching and see you in my next lecture.